Let's talk about Japan in the late 1980s, a time when the grounds of Tokyo's Imperial Palace were valued higher than all the real estate in California. It was economic madness. Property and stock prices soared, and everyone believed the boom would never end. But when the bubble burst, while most panicked, a few saw opportunity in the chaos, and their story is a masterclass in patience and contrarian thinking. In the 1980s, Japan was the world's economic superstar, an unstoppable force that seemed to have unlocked the secret to prosperity. The country's transformation from post-war devastation to global powerhouse was nothing short of miraculous, and the world watched in awe as Japan's influence spread across industries and continents. Its stock market rocketed to dizzying heights, its companies dominated global markets, and its management techniques were studied and imitated everywhere from Wall Street to Europe. Japanese brands like Sony, Toyota and Panasonic became household names, symbols of quality and innovation. The Nikkei, the Tokyo Stock Exchange, soared from 10,000 to nearly 39,000 points in less than a decade. A meteoric rise that seemed to defy gravity and logic. Even secretaries investing in stocks on the side sometimes made more from their portfolios than their bosses earned in salaries. The sense of prosperity was everywhere, and the optimism was infectious. Real estate was even crazier. Banks lent against ever-rising land values, fueling a feedback loop of fantasy. Tokyo's land was said to be worth more than all the real estate in the United States combined, and speculation ran wild. Japan's confidence was absolute. It seemed unstoppable. Young professionals strode through Ginza and Shibuya with a sense of destiny, believing their country was leading the world into a new era. To the average Tokyoite, it felt like they'd cracked the code to modern life. The future was Japanese, and everyone knew it, or at least everyone wanted to believe it. But as history shows, what goes up must come down. The bubble would soon burst, leaving behind lessons that still echo today. On the last day of 1989, the Nikkei peaked, then crashed, losing over 60% in 2 years. The property market collapsed, banks were left with bad loans, and the nation's wealth evaporated. The economic miracle was exposed as a house of cards. The shock was profound, jobs vanished, optimism turned to anxiety, and the lost decades began. The system that promised prosperity had failed spectacularly. Japan Inc. became a cautionary tale. The country retreated into a long, uncertain economic winter. The Bank of Japan slashed interest rates to zero, hoping to spark spending. Instead, traumatized citizens hoarded cash, shunning risk and investment. Savings piled up in bank accounts and under mattresses. A cycle of caution set in. No spending meant no growth, and no growth meant more fear. The government's free money policy backfired. Cheap money sat unused. For nearly 2 decades, Japan was paralyzed by risk aversion. But in this landscape, a few saw a different path. In a time when uncertainty gripped the nation, most people clung to the safety of their savings accounts, afraid to take risks. But a small daring group saw something different, a rare opportunity hidden in the gloom. With interest rates at historic lows and asset prices depressed, they realised that borrowing money had never been cheaper. While the majority hesitated, these contrarians moved quickly, understanding that fortune often favours the bold. They borrowed at rock-bottom rates and used those funds to acquire high-quality assets, apartment blocks, office buildings, and undervalued land that others were too fearful to touch. These were not reckless gambles, but carefully chosen investments. Their logic was straightforward: borrow at just 1%, buy assets that yielded 5% or more, and pocket the difference. This simple math created a powerful advantage, allowing them to generate income even as the broader economy struggled. This was financial arbitrage in action, turning widespread fear into steady profit. While others watched from the sidelines, paralyzed by uncertainty, these investors quietly built their wealth. While the majority earned almost nothing on their savings, these contrarians created a reliable stream of cash flow month after month from their investments. They weren't betting on a quick rebound or a sudden boom. Instead, they focused on building reliable income, confident that patience and discipline would pay off over time. It was a bold, calculated move against the tide, a testament to the power of seeing opportunity where others only saw risk. The real genius: patience. These investors held their assets for years, collecting rent and slowly paying down debt. They focused on fundamentals: good locations, reliable tenants, steady income. While others panicked, they ignored the noise and let time work for them. By the 2010s, many owned debt-free, income-producing portfolios. They became millionaires not by chasing trends, but by holding steady. Sometimes doing nothing is the smartest move of all. The lesson here is simple yet profound. Even in the darkest moments of disaster, opportunity quietly exists for those who are willing to think differently and act boldly. When the world seems to be falling apart and panic is everywhere, it's easy to feel lost or overwhelmed. But history shows us that these moments of chaos are often when the seeds of future wealth are planted by those who dare to see what others miss. Most people instinctively follow the crowd, seeking comfort in numbers and safety in conformity. But the truth is, real wealth is rarely built by those who simply do what everyone else is doing. Instead, it's created by those who act decisively when fear is at its highest, when others are too afraid to move, or too distracted by uncertainty to notice the opportunities right in front of them. Most people instinctively follow the crowd, seeking comfort in numbers and safety in conformity. But the truth is, real wealth is rarely built by those who simply do what everyone else is doing. Instead, it's created by those who act decisively when fear is at its highest, when others are too afraid to move or too distracted by uncertainty to notice the opportunities right in front of them. The Japanese contrarians of the Lost Decades understood this. They saw cheap debt and undervalued assets not as signs of doom, but as rare chances to buy quality investments at a discount. While the majority hesitated, paralyzed by fear and doubt, these individuals quietly made moves that would set them up for long-term success. Their edge wasn't some secret formula or extraordinary genius. It was the courage to act when others wouldn't, and the patience to wait for their decisions to pay off. They understood that fortune favors the bold, but also the patient. In every crisis, the herd instinctively runs for safety, often missing the very opportunities that could change their lives. Meanwhile, the bold and observant quietly build fortunes, taking calculated risks while others retreat. So when the next downturn inevitably comes, ask yourself, will you follow the crowd into safety, or will you have the vision and courage to look for hidden opportunities that others overlook? The choice you make could define your financial future. The story of Japan's Lost Decades Millionaires is a timeless lesson in wealth creation. It reminds us that fortune often smiles on those who dare to think differently and act with conviction. In the end, the choice is yours.